Title: The Warren Buffett Way, 3rd edition, book summary. Introduction. The Warren Buffett Way is a highly acclaimed book written by Robert G. Hagstrom that explores the investment strategies and principles of legendary investor Warren Buffett. The 3rd edition of the book builds upon the earlier editions and provides readers with updated insights into Buffett's approach to successful investing. This article presents a summary of the key concepts and principles discussed in The Warren Buffett Way, 3rd edition. 1. The investment philosophy of Warren Buffett. Buffett's investment philosophy is centered around value investing, which involves identifying undervalued companies and investing in them for the long term. He emphasizes the importance of understanding a company's intrinsic value and buying its stock when it is trading below that value. 2. The circle of competence. Buffett advises investors to focus on areas they are knowledgeable about and have expertise in. He refers to this as the circle of competence. By staying within this circle, investors can make more informed decisions and have a higher probability of success. 3. Fundamental analysis. Buffett believes in thoroughly analyzing a company's financials, including its balance sheet, income statement, and cash flow statement. He looks for companies with strong fundamentals, such as consistent earnings growth, high return on equity, and manageable debt levels. 4. Economic moats. Buffett pays close attention to a company's competitive advantage or economic moat. He looks for businesses with durable competitive advantages that protect them from competition and enable them to maintain their profitability over the long term. Examples of economic moats include strong brands, patents, or high barriers to entry in the industry. 5. Long-term mindset. Buffett's approach to investing is rooted in patience and a long-term mindset. He advocates for holding investments for an extended period, allowing time for the market to recognize the underlying value of a company. Buffett believes that short-term market fluctuations should not deter long-term investors. 6. Margin of safety. Buffett emphasizes the importance of having a margin of safety when investing. This means buying stocks at a significant discount to their intrinsic value, providing a cushion against potential losses. A margin of safety helps protect investors from the volatility of the market and reduces the risk of permanent capital impairment. 7. Portfolio diversification. Buffett advises investors to focus on a few high-quality investments rather than diversifying excessively. He believes that diversification beyond a certain point dilutes the benefits of in-depth knowledge and focused investments. Buffett often refers to the concept of a punch card, where investors have a limited number of investment choices and must choose wisely. Conclusion. The Warren Buffett Way, 3rd edition, delves into the timeless investment principles of Warren Buffett, providing readers with valuable insights into his successful approach to investing. By understanding Buffett's strategies, such as value investing, the circle of competence, and long-term thinking, investors can gain a deeper understanding of how to approach the stock market and make informed investment decisions. Disclaimer: this article is a summary of the book, The Warren Buffett Way, 3rd edition, and does not constitute financial advice. Readers are encouraged to conduct further research and consult with a professional financial advisor before making investment decisions.